we're often in the U.S. kind of blind to. Most of us here have bank accounts for our various kind of needs. Obviously, you shouldn't hold anything in dollars that you're want to keep on too long because they're going to be melted away. But we have the infrastructure of a bank, and these provide some services like bank-like services to countries where they have less stable financial systems and they want that. So I think there's a role to play. But I think in the long arc of time, Bitcoin is much more valuable.
One important question that emerges as the global financial system changes significantly is how the U.S. can continue to dominate the economy in a world that is rapidly adopting Bitcoin. In a crucial fireside chat at the Bitcoin Conference 2025, macro strategist Lyn Alden delved into that main topic. As a neutral reserve asset that could support the nation's economic future, Alden contends that the United States should strategically embrace Bitcoin rather than oppose its rise. Alden sees the United States leading this monetary revolution rather than trailing behind, with central banks reconsidering their reserve strategies and the legitimacy of fiat currencies being questioned. James Lavish, a former hedge fund manager and managing partner at the Bitcoin Opportunity Fund, and Mark Moss, a macro analyst who focuses on the intersection of technology and finance, join her. When taken as a whole, they paint a picture of a future in which America will not only own Bitcoin, but also serve as a global center for mining operations, infrastructure, institutional investment, and Bitcoin businesses. All three experts concur that Bitcoin is emerging as the new global financial foundation, despite their disparate backgrounds. It is becoming more than just a hedge against inflation. It is becoming a global settlement system, a neutral reserve asset, and essential infrastructure for an economy that prioritizes digitalization. Deeper queries concerning the function of AI, decentralized systems, and how the U.S. can prevent itself from making the same strategic mistakes as waning empires are also brought up in the conversation. This discussion offers a compelling look at the geopolitical and economic ramifications of Bitcoin's ascent, as well as how America can take the lead in this new era.
Business. I mean, we're already a very large market, and you want as many companies as possible to want a jurisdiction here and to operate here. And going back to James's point with the payment systems, a lot of these country blocks have been trying to do like their own little closed source payment systems for quite a while. Like Enbridge, for example, they have all these little like cross-border CBDCs, and then it's like, if you want to sanction this one, how do we do that? And they never really get any sort of network effect. They never really take off. Meanwhile, the entire time, Bitcoin is standing there staring them in the face as the open source solution while they keep trying their own little closed source ones. And I think the main thing that held it back for a while was, one, it was still fairly small, and two, it's volatile. So these entities would have to hold it, and so there's career risk. If you work at someone's central bank, for example, you're not generally recommending to go buy Bitcoin. But as it kind of gets to a $2 trillion plus market, it's really starting to enter the conversation as all of these like closed source ones have failed to take off. They've stagnated. They're not anywhere kind of further ahead than they were 3 years ago, and Bitcoin is. And I think that's in addition to a reserve asset, it's the payment rails and the settlement rails that they've been looking for, and it's always been there. I think anyone who has sent an international wire transfer can see that stablecoins have a cross-border role. And then also we see in a lot of countries around the world, people do want dollars, and this is another avenue for them to get dollars. So I think that the demand for it, especially outside of the US, is pretty organic. And one way to think about it is that there's a difference between savings and working capital. So for example, many people, you have to match your assets to your liabilities to some degree. Like if you have certain things you have to pay by the end of the month, you can't necessarily withstand the volatility of something like Bitcoin for that 1 month or 3 month period. And so you can kind of think of stable coins like a checking account that people have. We often see it in emerging markets, and it's something that we're often in the U.S. kind of blind to. Most of us here have bank accounts for our various kind of needs. Obviously, you shouldn't hold anything in dollars that you're want to keep on too long because they're going to be melted away. But we have the infrastructure of a bank, and these provide some services like bank-like services to countries where they have less stable financial systems and they want that. So I think there's a role to play. But I think in the long arc of time, Bitcoin is much more valuable. I tend to think it'll take a while, but it'll be growing the whole time. I mean, we're looking at right now, Bitcoin's a $2 trillion asset. The whole dollar system, depending on how you measure it. So if you look at the broad money supply plus the whole bond market, and the global fiat market, we're looking at hundreds of trillions of dollars. And what's challenging is there's a network effect because unlike Bitcoin, where there's not a lot of Bitcoin-denominated debt, in the fiat system, there's a lot of debt denominated in those fiat currencies. So that represents inflexible demand for those currencies. And then people have to kind of save in the asset that they owe at the end of the month, or that they owe on a bond contract or a loan or something. So I think this process is going to continue to take a while, but that doesn't mean that it doesn't move pretty quickly in any given 3 to 5 year period. Like if when we were at some of these conferences 3 to 5 years ago, the network was much smaller. It's gotten a lot bigger since then, but it still has a long way to go. So I think there'll be another 3 to 5 year period. It'll still, even if it's 3 times or 5 times bigger than it is now, it'll still be pretty small on the global scale. But then give it another multiple after that, and actually at that point you really start to challenge some of the biggest in the world. Right now, Bitcoin is climbing the market cap level, like it's getting nearly as big as some of the biggest companies in the world. So some of the biggest companies in the world are over $3 trillion in market cap. Bitcoin's around $2 trillion. So one more doubling, and it's basically bigger than any company in the world. Give it another 10x at scale, and it's kind of rivaling gold. Once it crosses, 5-6 trillion, it's basically bigger than the monetary base of other countries in the world. And it's going to take years, but it's so far it's 16 years in, and it keeps churning and getting higher and higher.
In an interesting move from theory to practice, panelists at the Bitcoin Conference 2025 talked about a major change in the way money works. Stablecoins and blockchain-based digital dollars are paving the way for Bitcoin to become the final currency. These tools are becoming very important in places where there is inflation and banks aren't working right because they provide a stable way to send money around the world and store dollars worth of value. Stablecoins are more than just useful tools. They are also quietly expanding the reach of U.S. monetary influence. People who don't have bank accounts can even indirectly help the U.S. Treasury by holding reserves in the form of digital dollars. But this dependence shows a bigger problem: fiat erosion. As time goes on, users start to see their digital dollars lose value while Bitcoin's value rises. This makes them change their spending habits from spending to saving, and eventually they switch to Bitcoin as their main form of currency. Big players in the game are paying attention. As sovereign debt rises and bond yields drop below inflation, money is quietly moving from safe assets like bonds and stocks to Bitcoin. It means a lot. This isn't just adoption in stores. It's systemic. Now, the real question is not if Bitcoin will change the way money works around the world, but when.
I think a really important signal, too, is the fact that Bitcoin is like over 100,000, despite the fact that interest rates are 4 to 5%. If you would have asked people that 3 years ago, a lot of people were saying Bitcoin is a zero interest rate phenomenon. It only makes sense when interest rates are near zero. And one of the new signals that happened this time is that despite the fact that the Fed got about as aggressive as they could, they kind of raised interest rates as quick as they could until they started blowing up the banks. That was kind of the ceiling that they ran into. And gold and Bitcoin had a little bit of a headwind temporarily, but then they just kind of shrugged that off. So gold soared from 2,000 to 3,000 an ounce, and Bitcoin's well over 100,000, despite the attempted hawkishness of the Fed. And this is kind of the first cycle where that's happened. I would argue that it's because we're in fiscal dominance. That's the thing I keep emphasizing. But that's a new era going forward, and it's a different type of trading regime than it has been over the past, the prior 15 years before then. Yeah, I mean, I think we saw a big price jump from the ETFs, and then we saw another big price jump from the election outcome. I mean, that's a real thing. When especially like portfolio managers, when they're looking at this, there's some part of them that's thinking, what is the probability that the U.S. gets really aggressive on Bitcoin? So they have to take into account that possibility in their price projections, especially if they're running assets for their clients and they have a fiduciary duty. And when you have an administration that's more favorable to it, at least kind of in the eyes of the market takes out some of the tail risks. Either way, I mean, it's a global asset, so I think it's able to shrug off a lot of friction. But it doesn't mean that that friction doesn't exist. And so if it's harder to operate businesses, if it's harder to have certainty about it, if it's harder to even get a bank account if you're a Bitcoin company, I mean, that's been a long-standing issue. And I do think that that climate really does matter. And then in addition to the seeing it pop up in different sovereign wealth funds around the world and seeing all these different Bitcoin treasury companies occur in multiple different currencies around the world, the accounting changes were also a pretty big deal. So I think there's a lot more tailwinds going forward. I think by trying to maximize productivity, because one of the downsides that can happen to the dollar is that as Bitcoin kind of reintroduces, like Bitcoin and gold, because it's also happening with gold around the margins, when they kind of come into the reserve asset mix, it displaces the dollar, which risks being inflationary. Some of the economists that advise the president are aware of that, and one of their answers for it is to try to be as productive as possible. So try to have energy flowing, no energy disruptions, try to have business be as smooth as possible, and that's the damage control that they can do as they kind of make this transition.
Bitcoin is slowly making its way up the ranks of global finance, and Lyn Alden, a macro strategist, says the real change is just beginning. Bitcoin is already on par with the biggest companies in the world, with a market cap close to $2 trillion. Alden says that the big change will come when institutional investors start moving money from bonds to Bitcoin. The flow of trillions of dollars out of low-yielding fixed income assets and into digital sound money could be the turning point for Bitcoin to become a real global reserve asset. Alden isn't the only one who thinks this way. Kathy Wood of ARK Invest thinks Bitcoin could reach $1 million by 2030, calling it the best time to invest ever. Well-known investors such as Stanley Druckenmiller and Paul Tudor Jones have said that Bitcoin is a good alternative to gold and a good way to protect yourself from inflation. On the other hand, Fidelity Digital Assets recently said that Bitcoin is now an aspirational store of value that businesses can't ignore. More and more people agree that Bitcoin isn't just another speculative asset. It's a rising monetary power that's replacing savings in places where inflation is high and taking money out of traditional debt markets. But, as Alden says, it won't happen right away. The long-term trend is clear. Capital around the world is starting to realign around Bitcoin.